All right. Everybody can see me, hear me okay? We're good?
Yep.
Welcome, welcome, welcome. Good afternoon, good afternoon, good morning, good morning, good morning. All right. Interesting day so far this morning. Some news pump and dumps, dump and pumps. Before I share my screen and start going over things here, any specific questions? Sometimes we get to the very end and I'm about to get off, and then all of a sudden the questions come in. So I'd rather see them now. If you have a question, I don't want to wait you to wait for an hour and then me finally see it. Or sometimes you don't come up with questions until after we start talking. So that's okay if you don't have any right now. But if you do, go ahead and post it in the chat. All right, here I am on TradingView. This is the weekly time frame. As you can see, the Gaussian channel is far away. We're still climbing above it. We don't have to worry about that right now, so let me get rid of that. Uh, on the weekly, here is my concern though, however, is that we still have bearish divergence happening. Even though we popped up and made a new all-time high right here at 112, you can see here it didn't even get up to the line. And then we pulled back all the way to from 112 to 98K approximately. And then and that bounced on the moving average here. And then we pumped all the way up to the line. And that created a new all-time high all the way up at 123K, but we still never got above this downward trending resistance. And we didn't get above the dotted line, which is the 70 on the RSI. And thus creating an additional lower high on the RSI. And when you have a high, a lower high, and a lower high, and then up here you have a high, a higher high, and a higher high, the price getting higher, the RSI getting lower, that is bearish divergence. And generally speaking, I mean, that could go on for years in the stock market, but in the crypto market, it doesn't happen very often. And when it does, it usually is an indication of a top. The problem is that we don't know which top it's going to be. It wasn't this one at 73K. It wasn't this one at 108K. It wasn't this one at 112. And it wasn't this one yet. Well, it could be this one. But as of right now, 123 is the top so far. But it wasn't any of these other ones when we were having bearish divergence. So is it possible that we come down a little bit here and then come back up and hit it again? Or come down far, all the way back down to here and come up and hit this again? And what that would look like up here is that we might come down, go sideways all the way over to this upward trending support at 115, 113, and then boom, all the way up to, who knows, 160, 170. But if this doesn't get any higher and it's just another lower high here, that would be 4 touch points. We already have 3, and that's one more than the last time this has happened. Well, back here you can see we had a high here at 41K. Right here is where we got on the RSI. Extreme greed overbought 41K. We had a big pullback down to 28K. Pumped all the way back up to 60K approximately, which was this peak right here. Still lower here, but higher here. Then we pulled back again and pumped up to 65 or 64.5, something like that. Dropped all the way down to 29K and then made another run for it all the way up to 68K. That was a higher high again. High, higher high, high, lower high. So that was 2 touch points. And then we had a third touch point, but that was a lower high on the price, but again, a lower high on the RSI. So bearish divergence nonetheless, that was the beginning of the bear market right there. And so that's really the only other example we have to go by is this bearish divergence here. And the difference is this one started off very similar. We had a high, a lower high, high, higher high. Very similar, high, higher high. Matching up with the tops of the RSI. But then we come down, and we came down far too, guys. We came down from 108 all the way down to 74.5 and retested this. That was us coming down to the bottom here and then making another run for it up. And here we are, we hit 112, and then we pulled back a little bit and shot up to 123. And here's the problem. It's not really a problem per se, it's just an unknown, is that in order for us to know that we don't have bearish divergence and we might, and this is not the top, normally we would want to see this get higher than this and break this downward trending lower high scenario. So in order for that to happen, when we pump up to the next high level, if we go all the way up to, let's say 120, 130, 135, 137, or even all the way up to 170, but this does not make a higher high, it just continues to be a lower high, then that would indicate a fourth touch point and probably the final one. But there's no history that says 3 is the top, 3 is the most, or 4 is the most. So that could potentially keep happening, apparently, but this is just never seen before. So it's very difficult. Normally, it's an indication of bearish divergence is what it's called. Normally, that means that we are overbought, we were overextended on the price, and there will be a big correction or pullback, usually a bear market. And that just hasn't happened yet. So it's very interesting. That's why back here, when I was saying that this could be it, that could have been the top. And then here I was saying 112, that could be the top. We just went up a little bit higher than the 108 to 112. That's only $3,000 more, $4,000 more, not big of a difference. Very similar to here, we went up to 64.5 and then we came down and came back up to 68, which is only 3 or 4,000 more before we went into a bear market. So that's why I was saying that here, that it's possible. I wasn't saying that's what was going to happen, but I was saying that, you know, when you look at history, that's what's happened last time. And so sometimes, you know, when you're reading the charts and you're basing all your decisions based on technical analysis, and the analysis is showing you that, hey, the last time this happened, this happened. That's really all you have to go by, guys, right? When you're looking at history repeating itself, you're looking at trends, and you know the old saying, the trend is your friend until the end. Why would you ever think that the trend is going to do something different when it's always done something specific? Why would you think it would be doing something different this time? And the reason why we think it would be is because of all the different changes that have been going on, all the catalysts that have been popping up one right after another. Trump, you know, the crypto administration, the reserve that they're promising to put into place, the Genius Act, all these things, Ripple getting all this attention with its banking relationships, all of these things coming about. These are major catalysts. You would think that the price of Bitcoin would be 300, 400,000 by now, $500,000. Just doesn't make sense how we can have so much positive crypto news and us only go up hardly any. Now, some people say we did go up quite a bit. We went from, obviously, in the bear market bottom, here we were at 15.5 just 2 years ago. And so if you do the math, and we went up from 15.5 to 23, that's a 691% move to the upside in this bull market. Not bad, not shabby, not too shabby. That's 7x. So, but from this bull market, this top here, when we broke the previous all-time high to the current price, that's really what you got to look at. And that is about 69%. So this bull market could just be 69%. That's possible. But It's not over yet, so we can't predict. We can't say it's over. We can't say it's only 69% because if we look at all the other things that have happened throughout history, like the one fact that I show you guys all the time, as far as this here playing out. Whoops, not this one. I'm sorry. Hold on one second. This one here is that throughout history, we've also hit the top of the 1.6 every single time. In fact, every single time we hit the top of the 2.36 on the Fibonacci. If you start each at the fib at the bull market bottom or the bear market bottom and go to the top, and you do that at the bear market bottom and you pull it up to phase one, phase two, phase three, phase four, phase five. We've always made it to the top of phase five, except for 2021. But we did hit the top of phase four, which is the 1.6, and we've done that every time. The only time we didn't get past that was 2021. And that was probably because of all kinds of other circumstances. We had the FTX collapse scandal, which was multi-$100 billion scam in a centralized exchange, which caused people to be panicked. That also happened during COVID, during a major economic collapse. All kinds of people were scared to invest. They didn't know what the hell was going on. People couldn't even go to work. So all kinds of reasons why this possibly happened. All right. And but we did get to the top of phase four, and we are in phase four right now. We broke through phase one to phase two. We got through phase two to phase three. We broke through phase three into phase four, and we're even higher than this is showing right here. This is probably showing 112, 115, and we already popped up to 120. So we're even a little higher than what this is showing. And so getting to the top of phase five would be about $176,000. I'm sorry, phase four would be about $176,000 for Bitcoin. If we were able to break through that and got to top of phase five, it would be $541,000 for Bitcoin. And there's a lot of people out there, a lot of very smart people who think that we will hit this level this time around because this time is different, because of all of these catalysts and all these changes. We could have that super cycle to make up for this one. That's all possible. But I don't worry about phase five until we complete phase four. And one way to know whether we're going to complete phase four or not and get to the top of phase four, 176K approximately at the 1.6 fib, is as long as we stay above the floor of phase four, which is this white line right here, which is $70,000 for Bitcoin. If we stay above that for the next month or two, and you might say, well, that's far away. Of course, we're going to stay above that. Nah, not necessarily. Every one of these pullbacks you see when we run up to a high, look at this. We break out previous all-time high right here. That would be the same as us breaking out 68K, 70K right here. We run up to, let's say, 108. We run up to 112, and then we run up to 123. This was the last bull market, right? But just as an example, very similar to what we've done already here. And we had a and we had a 57% pullback all the way down to 28K before running back up. So what would that look like here? Let's just do the math real quick. We're at 20. We're not even at 23K right now. We're at 118. So let's just do the math from there. But let's do it from the top, from 123, because that's the measurement I just took a minute ago. If we had a 57% pullback, guys, that would bring us down to 52 grand. So don't think it can't happen. It happens almost every bull market. Look at this one back here. We had a huge run up. This was a major run up. Here's the previous all-time high. We broke it here. That would be the same as us breaking 68K, 70K. We run up to, let's just say 99K, 100K. We run up to 104. Then we run all the way up to 108. This one pulled all the way back down to, that's a 75% pullback. That would be the same as us falling all the way back down to 30K. 33K. So you can't be overly scared about that, because that is, now here is something that is also true. Although that has happened in the past, Bitcoin is stabling off more now than it was back then. So back here in these bull runs, it was much more volatile. We had triple digit, quadruple digit percentage bull market, parabolic moves to the upside. And if you look at this and you look at it in a algorithmic scale, we're not going straight up anymore. We're not going parabolic like we did for the first, 5 years. We start to taper off. And that just means we still get higher highs, but the percentage or multiple X factor is getting less. It's diminishing. It's getting less. It's getting less. It's getting less every time we have a bull market. It's still going higher than the previous, but it's not going higher by a multiple of 100 or 200 or 500 like it did before. It's going up, let's just say this one was 1,000X, this one was 100X, this one was 20X, this one was, 12X, and this one's like 6X, 7X right now, so far, 7X. Is it really going to go higher than the previous one? Think about that for a second. Is it going to go up higher? No, because look at the curve here. Could the price go up more? Yes. But is the percentage gain going to go up higher than these previous bull markets? Probably not. So you gotta look at all of these factors, and and it's one thing to have hope, and it's one thing to buy into the hype of everything. But if we really look at what's actually happening, this is normal, guys, because as it's kind of like the earth cooling, as the crypto gets more solid, more secure, more stable, the price goes up higher and higher and higher. The volatility calms down a little bit, right? So with that being said, we certainly could hit the 176 range, but that would make sense actually hitting the top of phase 4. But that would still keep us inside this overall arch. And then sorry about that. Having a little issue with one of our properties. So with that being said, guys, let's look at some other factors here, and we'll get to the charts. In fact, let's just go look, because some things are pumping a little bit right now. Back up from its little dip. Maybe not. Let's go look. This is XRP. As you can see, we fell out. We fell out of this upward trending channel. Obviously, had a big dump down. Where did we dump down to? Right about. We got a level here. We wicked down into this zone. To me, it looks more like a price range right here, from here to this whole area right here, where we have this volatility here, this consolidation. We hit the top, we hit the bottom, hit the top, hit the bottom, wick down below, held support here, came up, hit resistance here, broke through here, held support here. We come all the way down to it now. We wick all the way down to the bottom of it, pull back up, find support on the top again. I don't think there's much to worry about as far as, XRP dropping back down to 50 cents or anything like that. I don't think that's going to happen. However, it could drop back down to 250. And people freak out when this happens. Oh, sell, you should have got out. You should have got out. There's people there was people selling. There's even some famous people that, what's that guy's name? Point Poitier or Pointer or whatever his name, the pizza guy who, goes into pizza restaurants and critiques them. Barstool.
Dave Portnoy.
Yeah. So he apparently sold. He bought XRP. It pumped up to like 240 or something, some ridiculous 280 or something like that. And he sold, and then it pumped up to 380. He said he lost $6 million by selling too early. So, well, he didn't lose it. You can't lose something you never had, but he would have made 6 million more if he would have just not sold. And so obviously he's depressed about that. But you have to understand, what are you selling for? Especially if you're rich already and you don't need the money. What is it that you're selling for? Obviously, people sell for a reason. The main reason is to take profit. Everybody is so convinced and so sold on taking profit that they forget what they should, they forget that they're transferring an asset from a valuable asset that's going up in value to one that's not. When you take profit, you're basically closing out one asset class and converting it back to another one. The asset class that's going up at a rate of 60% in the last couple of months, you're taking that and you're selling it and you're converting it back to an asset class that's going down at a rate of 8 to 10% per year. It doesn't make sense why people do it, but we've been conditioned to think that, oh yeah, you got to take the profit. And what does that leave you? It leaves you with back into an asset, which is fiat currency, US dollar bills or any dollar denomination, which the buying power is going down over time, not more. Now, Trump, they're talking about changing all that, right? The Genius Act and all this stuff that it's going to back the US dollar against the digital currency, a Bitcoin reserve, and it's like digital gold and all this stuff. And it's going to peg to the US dollar and all this stuff, and it will stop inflation. It will stop the deflationary rate of the US dollar. All that sounds good, but until that happens, if they print more money, guys, and they print 80% of the entire world supply of US dollars, 80% of all the money that exists in circulation was printed in the last 4 years. Not the last 200 years, the last 4 years. So that's why inflation went through the roof and things just shoot up and the cost of everything goes up. So, but Bitcoin goes up 7x in the last 2 years. That's not 7%, that's 700%. And the purchasing power of the US dollar has gone down 70% during that time. So I don't understand why people want to convert from that asset that's going up back to an asset that's going down, other than the fact that they need the money to pay bills. So I understand that aspect of it. But if you have income and you're making money to pay your bills, then you need to look at this more like investment, more like long-term strategy, midterm strategy, and be a little bit more strategic with how you pull profits. And I know that to each individual, it's going to be different, guys. I'm not telling you not to take profit because we need money. And don't get me wrong, I'd rather have both. I'd rather have a lot of crypto and a lot of dollars. I hope the dollar stays strong for the rest of my life and 5 more lifetimes. But and I think that what Trump is doing is the only way to help that happen. But it was a mess leading up to this point. And generally speaking, when you're cleaning out from all the mess from under the rug, you make a mess first before the things get better.
Nico, I have a question.
Yes.
Okay, since you brought up Trump, I read that Trump is manipulating the market and the banks are manipulating the market. My question is how do they manipulate this market with the catalyst? Or I mean, because couldn't they make it any price they want? I mean, I don't understand how how do they manipulate it?
they can't make it any price they want. They have to buy or sell. They have to drive the price down or up. And if so, it's kind of like you push in a car. So the car is in neutral. You get behind it and start pushing it. In the beginning, when you start pushing, it's very, very strenuous. It's very hard to get it rolling. But once you get the momentum going and you get it going, it starts to roll almost effortlessly because of momentum. But if you stop and take a break while it's rolling, or you slack off on pushing, the car will come back to a stop, and then it takes all your energy to get it going again. With these types of things, all it takes is, let's just say that I had a billion and my best friend had a billion, and we wanted to manipulate the market. I say, okay, buddy, you go and buy $100 million worth right now, and I'll buy $100 million worth tomorrow. And as things start to pump up, everyone's going to think we're going to the moon, and another billion will come into the market. Maybe 5 billion will come into the market from the retail traders, and they'll start buying and buying and buying and buying, and the thing will shoot up, and then both of us will sell, and we'll take our 100 million back each, plus another 100 million, and we'll dump on these people.
Oh, that makes perfect sense. Thank you so much. I just didn't understand that. I'm sorry to go off
Well,
topic.
that's an oversimplified approach. Now you talk now. Could that happen? Yes. Do people do that? Yes. And on some of these lower liquidity cryptos that have like a $10 million market cap or a $5 million market cap, one person can buy it all. One person can control the whole thing. So there was coins that I had. I had enough coins that if I would have sold them all, it would have dumped. The whole chart would have went down to zero. And that was back in the ICO days when we used to get into these ICOs where I would go long, and I would buy, not go long, but just buy. And then the price would shoot up to 40x. And if I would just sell it all, it would just dump right back down to nothing. And so, and not only that, but you couldn't. There wasn't enough liquidity to sell it all. Got to have sellers. So when you're dealing with Bitcoin, where there's so much liquidity, you and we can sell $5,000 worth of Bitcoin, $20,000 worth of Bitcoin instantly every second of every day, because there's so much there. There's so much liquidity. There's so many buy orders and sell orders. There's so much liquidity sitting in these liquidity pools that it's ridiculous. But when multi-billion-dollar orders come in, they can't do it all at once. They have to wait. It goes in stages where they buy, and let's say they want to buy a billion, it buys like 10 million, and then 5 seconds later it buys another 10 million, 5 seconds later it has to find the sell orders in order to fulfill those buy orders. So that's why when Michael Saylor buys 800 Bitcoin, when there's only 400 being produced every day by the miners, and he buys 1,000 Bitcoins or 10,000 Bitcoins all at once, it has to come from somewhere, and it causes the price to go up. But that's why sometimes it's in staggers. It's staggered. It's like this. It's like you'll see a big pump to the upside like this, consolidation, and then he buys some more, consolidate and buy some more. He can't buy it all at once, and sometimes that's the case. So we see multiple pumps in a row. And then usually followed by a dump, because somebody's taking profit. Somebody's going to sell on that, or somebody has the inside information and knows that that's about to happen, and they're just going to take their profit. They're playing the profit game. I mean, there's a lot more to it than what I just said, and it's just that's kind of the oversimplified example how markets can be manipulated by people with money. So those of us who are just retail traders, if we're totally clueless and we don't have any tools and we can't see the liquidity and we don't know what's going on, we can be totally eaten up by these whales, just like huge schools of brim or shrimp, right? The whale opens his mouth and just swallows everything. Or you can be those little sucker fish that are stuck to the side of the whale, where we kind of just ride along with the whale and we get their crumbs. We're not being eaten by the whale. We're kind of just taking them what's left over after they wreck the market. So we're trying to ride along with the whales because we can't be the whales at the moment. And we don't really know what they're going to do next or when they're going to take their big gulps, right? So we we kind of have to wait to see these moves, or we see these consolidation periods, these giant formations where we know that a breakout is imminent. And usually when it does break out, it's usually either parabolic to the upside or downside. But sometimes we can't see it coming. Like this was the big wedge on XRP not that long ago, which I had this drawn right here, and I basically said that we're going into an apex here. This is an upward trending wedge. We have a ceiling coming down, but the overall trend is up. Probably going to break out to the upside. That's what it did. Generally speaking, that's what it does. Take the highest point here. I don't even know if that's accurate. It went up a lot higher, obviously.
Hey, Nico, question.
Yes.
How do you know during these pullbacks that we've reached the bottom for the time being?
Well, that's a good question. So you have consolidation, you have major support and resistance levels. So this one right here, this white line, which was on XRP was at $3.37 or so. We hit that on the way up. We hit this here, but we hit this here. But then when we went through up to here, we came down and hit this several times where we couldn't go below. So that is major support. Was resistance here, a small amount of resistance here. We had a small hit resistance here. We had a small bit here. We had a small bit here. But this one held, and it held here. It held here. It held here. It held here, 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 here. And we started to climb from there. So that was major support. And so when we break from this upward trending channel, that would have been my first guess that we would have hit that as support, but we went right through it, but we did come back up to retest it. So that retest right there, boom, first retest, and then we drop down to the next level. And that next level is this area right here. And we did bounce on that, and we come all the way back up, and we held support above this level temporarily. And now it looks like we made a higher high than here, but we did not hold above it. So normally, what I always say is, whenever that's why I didn't give a long signal here. I was actually, what did I do up here? Did I go long? It's showing me a long. I must have forgot about that one. I must have given an example to someone. But so whenever we bounce on support and start to climb and make a higher high, that's usually a good sign that we are climbing back out and we have higher highs and higher lows. And so what I would have expected here is that once we made this higher high, we would come back and hold a higher low right about here, which was this previous resistance here. So once we get past this resistance, we want to hold above it. That's when you normally would go long. And since it didn't do that and it fell back below, it's now creating an M pattern. Bearish. But let's see, we had a bear flag here. I'll answer your question more specifically here in a second, but bear flag, break to the downside, possibly another bear flag right here. Breaking to the downside. M pattern, breaking to the downside. So where's it going to go? Possibly right to the bottom here again, which would be a double bottom. So to me, that would be a good entry point. It hit it once, bounced, came above, held the support, bounced, made a higher high, but couldn't hold above it, fell back below, hit it right here, bounced, and then fell through. So to me, this is a nice M, possibly where the breakout is coming right back down to the bottom here. And so I would wait to see if we bounce here. That would be a double bottom. But if we just form an M here, that's different, because that's an M up here that we've already formed. But if we form an M here, then in other words, if the M, this is the first leg of the M, and if the second leg is here, then the breakout would be from down here, down lower, and that would bring us to here. And let's just see where does that bring us. Interestingly enough, to the next support level from this little consolidation period here. We have a couple of them. We also have this one here, which was resistance right here. Boom. We break through and we retest it as support here before climbing out. So this is a support and resistance level right here. I would imagine we might hit that first. We would hit that first, and that would be the first support. Very similar to this whole area up here. In fact, I will turn it into a price range. And so what would happen is probably very similarly to this one here, where we come down and hit it, go through it, hold support on it. It would look like this, where we would come down and maybe go through it, hit it, and hold support on it. And if we do keep dropping, then it would just be a continuation like that, all the way down. The next level here, we had support here. That would be the next one. I mean, resistance rather. And we had obviously here where we. So what I do is I just keep drawing all the different support and resistance levels. This one might even be a little lower, right, too, because we have major resistance here where we shot up. And we couldn't get through that here. We went through it a couple times, but we didn't hold above it. Came back down and we hit it again here. Resistance, finally went through it and retested as support before climbing out. So there we go. There's another whole support and resistance level. So we got all these little zones, all these little price zones right here on the way. You can see them clearly now. Even came down and retested this one before climbing out. And so sometimes we just recreate what we did on the way up, on the way down. And it starts to look like a mirror of this side, on this side. It does mirror it. It's going to look like this, where it just falls down here, gets into this zone, consolidates for a minute, falls down here, gets into this zone, consolidates for a minute. And it will look just like this side. If it does that, then we're coming back down to the $3 range, which is, yes, possible. And
there's a big liquidity pool at like 295 to 292.
Yep, that's this whole area right here, guys. This whole right there. This whole zone right here. What Chad would call the boardroom. And this is nothing to be scared of. That would be a good entry. So I mean, what did I do? It looks like I might have hit along up here with a small amount, because as soon as I ever see a big dump like that, and I think it's news related, sometimes it just corrects itself and comes back up to the channel it was in, and which would have been this one right here. It was already in a downward trending channel. I was expecting that. I didn't give a signal on it because a little risky. Whenever I see a big dump real quick, sometimes I just try to catch the bounce, but a lot of times that's not done bouncing. So I would have expected that to maybe come back up into this channel once. It's kind of like deer. You ever watch deer grazing out in the field, and they hear a noise and they all put their head up and they're looking around and their ears are twitching, and they all of a sudden they just all take off and they run like 100 feet, and then they stop, and then they turn around and come back to that same spot that they were in. This is what happens with, whenever there's panic or some big dump, everybody freaks out for a minute, and then boom, once they realize the coast is clear, they just go back to where they were. And this sometimes happens often on the charts, especially when you see whipsaw action. Usually if there's whipsaw action, it looks like this. We're kind of trending in this channel, right? We're going up and down, up and down. And then all of a sudden there's a news event, some crazy thing happening. And then we got bam, bam, two giant moves, one down, one up. And then what does it do? It just comes right back down into the same channel it was in before. That's usually how it works. People get taken out, liquidated, but it usually just goes right back to where it was, even after this huge whipsaw action. And so this is what I was thinking might happen here, but it looks like something else is going on. Not only did it drop out of the channel and did not come back up into it, but it dropped below the floor, which was this support level here at $3.40, $3.38, give or take. And that's why I had my entry there, because every time so far that it hit here, it climbed back up. So the trend is your friend until the end. The end is when it no longer is the trend. And when it stops doing what it was doing, then that trend is over. So probably should have stayed in this, but I was busy doing something else and wasn't watching. And so don't do as I do, guys. That's why I didn't give that as a signal. And whenever you see me in an open position, guys, and you're like, oh, Nico, I didn't get that signal. It's because I didn't give it, because that was not a signal. That was not something that you do. If you want, that's something that you do when you have a sub account that you just take risks with, and you try to catch the big dumps. And because if this would have hit here and then climbed back up, would have been a great entry, and probably maybe even went up higher after that, because this was just some news announcement. And that can still happen. We can still bounce here and climb back up once the smoke clears from the news. But like I've been saying all along, guys, for months now, is that we could have a huge crash, not just in crypto, but in the stock market and everything, right? And a lot of people will get hurt by that. A lot of people will be, thinking it's over. They'll think everything's over, but it could be by design, like Angie, what we were talking about a minute ago with manipulation, so that these big players who are all lined up and ready, who have been waiting for all of these rules to change and all of these regulations and all of these contracts to be signed and all this stuff to go before they pile in with all the money. And to them, they would much rather buy $1 billion worth of XRP at $3 than $3.80. Because if you do the math, that extra 80 cents is like $800 million more, right? They're not stupid. And so same with Bitcoin and anything else. So the market makers, the people who are playing with the big money, they do manipulate the market. And they, a lot of times also, Angie, I told you about like two guys getting together and buying a bunch just to get the ball rolling, get the car moving. But sometimes it's not even the buying, it's just news press releases. Press release, let's say this, it moves the market, and then we dump on everybody once the market goes up. Or as soon as it drops because of the bad news, we buy in, and then it goes back up.
Great analogy, Nico. Thank you. I understand it much better now.
All right, let's look at Bitcoin, see what's going on here. Let's look at Ethereum too, because Ethereum was killing it. And someone posted in the group, now we did have a Head and Shoulders, and of course it did exactly what Head and Shoulders do. I mean, we broke below, came back up to retest. In fact, let me just get rid of this because it's probably we have major resistance, support. This is support, even though it went through. The reason why is because it went through and never held underneath. It didn't hold it as resistance. It just went right back above. Went through, went right back above. Went through, went right back above. Went through, bounce. Went through, went right back above. Went through, retested as resistance. You see the difference? And then come back down, retest again as resistance. That's usually an indication that what was support is now resistance. Now we have a downward trending line here, but we also had we definitely had a shoulder, head, And I don't know if this was the shoulder or this whole thing was the shoulder, but this is the drop off point. And so for Ethereum, we could see a drop down to back down to this level. And that would bring us right down to, well, wouldn't you know, that support level. We had resistance, resistance, support, support, support. Finally, we curved up. We had a nice big cup and handle here where we broke to the upside. Let's look at, is Bill on?
Yes, sir.
What's the, let's see, the, how do I pull up the crypto market cap excluding Bitcoin?
Total 3. Type in total and the number 3.
This one, market cap. So there we go. Thank you.
Yep.
I had it the other day and I couldn't remember how I found it. So as you can see here, guys, I already drew a cup and handle on here. This is huge. What's happening right here? This is a big deal. I don't normally talk about the total market cap excluding Bitcoin until we get to what we think might just be altcoin season. Let's just move this for a second and look at this. This is a apex we are in. Right? After a multi-year cup and handle. I mean, I wouldn't even say this one. I'd say this one because this is the top of the rim here. Up and handle. Breakout probably imminent. We're coming into a major apex.
Does that mean we gotta kind of get into these altcoins now?
Yeah, I mean, Chad and a lot of people in the group, Bill, you know, they've been trading altcoins for a long time. But this is when Bitcoin dominance weans, when Bitcoin nears the top, and altcoins, we go into technically what they call altcoin season, where the altcoins start to go parabolic or ballistic. Normally, how the market cycles work, guys, is like this. Bitcoin goes up, 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 and it is the tide that rises all tides, all the boats. So all the cryptos go up in value while Bitcoin's going up. Not all of them, but the ones that correlate, which is most of them. When Bitcoin dominance starts to wean and Bitcoin's hit the top, let's just say that was it right here at 123. I don't know if it is or not, but let's just say it was. We go into altcoin seasons and the mid caps, which are the most of the higher end altcoins, start to go up. They get their run, bull market top. They start to wean, and then we have the micro caps and the shit coins and the meme coins and all that stuff. So we got like 3 phases here. So right, usually when Bitcoin does its thing, all of these have gone up while Bitcoin's going up. As you can see, Bitcoin's going up, 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 up. All these coins going up, 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 up. Bitcoin starts to wean, boom, altcoin season. And then we have a parabolic move to the upside with altcoins going up without correlating with Bitcoin. As Bitcoin's coming down, these are starting to go up against Bitcoin, which normally they're going up with Bitcoin. And same here when most of the major altcoins, Solanas, the XRPs, all the big ones start to wane and come back down, we have the micro caps, the little ones that most of you never even heard of, that you can't even get on Coinbase, or you have to, you know, be on Uniswap or PancakeSwap or something like that. These coins are not even listed on centralized exchanges. But this right here, this is big right here. Because we have this major upward trending support. We hit it here and we wicked down to it right here. You can see it clearly. Right there was the major wick there, boom, and here. We came up and hit the top here, the other side of the cup. The handle came down and wicked down to this line right here, and we're pulling back up to the top, guys. This is like breakout imminent territory. I am on the weekly time frame, so it does take a while for these charts to go, but we got 4 days and 8 hours left for this candle to print. So whether the next candle is going to be green, it's either going to break to the upside or the downside, guys. But generally speaking, I would say this is very bullish, not bearish. And if we go from 1.1 or a $1 trillion market cap to a $5 trillion market cap on the overall crypto exchange, what do you think that means to the prices of these average coins? It's like a 4x. A 4x more.
So Nico, I have a question.
Yes.
My struggle right now is I was in Doge and EGLD since March, and I just sold them this morning because they were starting to go down, and I didn't want to go in any more drawdown again. Do you think that was a mistake, me selling them? I mean, I know it's kind of like a
Crystal ball question.
probably, yeah, it is. I'm good at those lately.
That's all right.
But I was in some really bad.
That's what we all want to know. We all want to know the unknown. That's the problem.
Yeah. I was in some really bad drawdown on both of those coins, and I was like negative $4,000, $4,500 at the top, at the very bottom of it. And I just basically got myself, from the time I started this course, which was last November, till now, I lost a decent amount of money doing stupid stuff. But with those two trades, I got myself back up to almost, clean slate, back to green again, which is, I'm happy about that. But at the same time, I'm kind of like, well, I want to get back in because I know this alt season's about to start, like you were just saying. And I struggle with when to get in because I don't want to get burned again and have it drop on me, because I know when I got in it last time, it dropped on me as soon as I got in it. And that's how I got into this mess.
Yeah. What I would recommend everyone do, and it's so easy for me to say this now, but it's very difficult to do sometimes, is be patient and sit on your hands. And everybody wants to make money right away, and there is money to be made every day, probably every second of the day. And you see people posting in the wins wall all their gains and stuff like that, and it's like, oh, you feel like you're missing out, right? You feel like you're, that you should be getting in these trades. Man, there's so many trades. Oh my God. But what most people should do, what most everyone should do, is sit on your hands and wait for these big moves. Like, you will make more money on a breakout here in altcoin season on some of these coins that Chad and some of the other traders are trading, waiting. Like, if I'm going to make 100 grand in crypto in this bull market, let's just say the rest of this bull market, does it matter to me if I took 100 trades a week to do it, or 1 or 2 really well executed trades? What would be better? I mean, you still do it, but with the 1 or 2 executed trades, it's more for sure that this is going to happen. If we break this, which is probably imminent, it's imminent, guys. This is the weekly chart, but this is the overall crypto total market, excluding Bitcoin, and we are in a apex upward trending support confirmed cup and handle right up to the edge. Yeah, I think that, from a $1 trillion market cap possibly to a 4, probably another 4x at least on most of these coins with leverage could be astronomical gains for many of you if you know what you're doing. So sometimes I think just getting prepared for big moves like this could yield most of you way more money than constantly making greedy decisions to jump in and out of all these little positions. That's why you're probably seeing less signals from me lately not because I'm lazy. It's because when we're in a bull market and we're just climbing, it's easy to give trades multiple times a day. But when we hit a top and then we hit another top and then we consolidate, it's very risky to be giving multiple scalping signals when that's not really the best move for everybody. Because these little moves, we could have huge pullbacks when we hit tops like that. And so it's a little riskier for me to say, hey guys, I'm going long right now. I'm going to go short. I'm going to short the market right now because we just hit a top. I can do it in my sub account and I can take the risk on it, but it's not really wise of me to tell you to do it, because if you don't know what you're doing and you don't understand what's actually happening, that would be a risky trade. So better for me to wait until I see a really good trade setup before I give you a signal. That's just my philosophy. I hope you guys appreciate that, actually, because there was a time in the past that people would be messages, man, I want more signals. And I would say on a live call like this, I'll be like, guys, I could give you more signals, but they're going to be riskier. They're going to be less win rate. And some people actually wanted it just because they were bored. And I was like, I said that as a test just to see what people would say. But it's like, some people want what's not in their best interest just because it's exciting. Because it is more exciting to have a lot more signals, right? But if I'm giving you a bunch of if I'm giving you a bunch of unknown signals, like this is risky, and I actually have to put that in the notes when I post a signal, because I've done that before, guys, where I'd say, guys, this is a short scalp. It's not recommended. I'm doing it. Here's my entry. Here's my exit. But just keep in mind, this is high risk, and it could easily pop up instead. I've done that before, and I don't even like doing that, because some of you are going to just do what I'm doing rather than really think it through. But, as you guys know, I test things all the time. It's in my nature. I am a more someone who takes more risks, but that's not how you grow your account big. Once you do grow your account big, you can take some money and put it into sub accounts where you can take other risk and stuff like that. But until then, while you're learning, I don't recommend any of you do that. But the problem is that because I'm teaching and what I'm showing you what I'm doing, a lot of you just see what I'm doing and you just go copy me, even though I didn't give a signal. Well, I looked at the, let me just show you what I mean real quick. I looked at your screen share, your screenshot, and it looks like your entry is here. Look at this, and then, so you might see like this. This was not a signal. What was it? Let me go look. Maybe it was. That was a signal. But sometimes you'll just see it's just me explaining what's happening on the chart, but you'll see my lines here, and you'll say, oh, it looks like he's long now. I'm gonna go long. And that was a terrible entry for me. So don't do what you see that I've already done if it's not a signal in the group. And I know that can be confusing for some of you, but that's why I say just trade the signals. Chad signals or my signals, whichever you prefer. Some of you, listen, guys, I'm not saying that I'm better or worse or Chad's better or worse. We have different styles. Historically, I have been more of a scalper. Chad historically has been more of a swing trader, which is longer term, waiting for better trade setups, waiting for the big moves in the market. And historically, I've been more trading on the slower time frames, scalping little moves in the market. And then I did that very successfully for a long time. But it is a lot more work. It is a lot more stressful. It is a lot more to keep track of. It is more nail biting sometimes, because you got to get in and get out quick. But that's not really the safest way to trade. Don't get me wrong. I know people who scalp and make fortunes, and some of you love it. Some of you, that's what you want. You want the quick in and out. You like the action, and you like going to the casino. You like trading. You like gambling. You like all that stuff. And there's nothing wrong with it technically. But as I get older, as I get more better at, and I'm easier, I can look at this stuff. My natural inclination is to work less, not more. It's to take the easier, better trade setups, not the more risky ones. So ultimately, I actually want to start doing the more longer term swings, because I do those anyway. It's just if I'm waiting for those all the time, then there's going to be less signals. So I'm giving signals so you guys also learn how to do them, because there's people in the group, guys. When you go in here into the wins wall, let's just look at this for a second. Look at Michael here, XLM. Luna, or Lunc, Doge, ETH, LTC, Algo,
Can you
QNT.
put your screen back up? Thank you.
Sorry. So this is this I was giving an example of Michael. And look at all these trades yesterday. 124% XLM, Lunc, Doge, ETH, LTC, Algo, QNT, Usual, Ape, Tengu, XLM. So I didn't give any of these signals. Killing it. Good job, Michael. Killing it. Because that's why you're here, guys, is to learn how to do this. And yes, signals are great. And I'm sure Michael will take them when he sees them. But in the meantime, he already learned how to do it and how to go find them. So now he doesn't need to wait for my signals or chat signals. Some of these might be chat signals, but he goes and finds these trade setups himself because now he knows what to look for. Same with Joshua, same with Willem. And these guys are on the calls. John Larson, he's probably on the call, the live call, because they want to keep learning. They want to keep getting, being in the loop and being in the mix of things. That's how you continue to grow. But they don't need a signal to go find a trade setup. John shorted, look at this. John shorted Bitcoin at 100x leverage for 169% gain today or yesterday. I didn't give that signal. Maybe I did or not, but he probably didn't take my signal to do that. Jimmy, first major win. Thanks, Nico. So I guess that was my XRP signal. 170%. Good job. So point is that Nomi, she's always doing her own thing. She knows how to trade now. She doesn't have to worry about it. So that's the goal, guys, is to get you to where you are self-sufficient. Don't depend on me or Chad to get you to the point where you don't need either of us to go out there and find these trade setups. But in the beginning, when you're new, yes, you should wait for the signals. They're just more like, here, look at these are signals that Chad's been posting. They're just more, they've been more technical analysis put into it that you may not be aware of yet. Because before Chad gives a signal, he's looking at this and he's drawing a support resistance. He's looking at where the probabilities are. He's looking at the liquidity pools. He's looking at the trends. He's understanding the entire market from top to bottom. He's looking at all the charts, the higher time frames, all the way down to the lower time frames before he tells you this. So he's already, put his expertise and his thought and his intention behind it. And so there's a more likelihood of it doing what we want it to do rather than you just going throwing it dark. But once you understand this and you know what Chad's looking for and you know how to do this yourself, you don't need the signal anymore. That's the goal. Right. So with that being said, we got.
Yeah, I mean, I'm definitely struggling from the FOMO for sure.
Yeah. And that's it. That's what it is, guys. It's a mental game here. It's a mental game. FOMO is strong, not just in crypto, but everything. You see someone making money doing something like this guy is doing some kind of drop shipping. Oh my God, that looks easy. I want to do it. This guy's doing Amazon. Oh my God, that looks easy. I want to do it. This guy's flipping houses. Oh, I want to do it. Without thinking at all whether you even like doing that or not. See, most people end up doing things for money because they see someone else doing well at it and they just say, oh, it must be easy. No, some people are just really made for those things. Some people are good at things and you may not be good at that thing. And it comes down to, do you have the compensity? Do you have the desire? Do you have the stick-to-itiveness? Can you do it continuing? Now, trading is one of the things that anybody can learn, but everyone starts out with FOMO, fear, and greed. Everyone. And so you have to unlearn some things. You have to get to the point where you can control those emotions. Just like relationships, guys, you get married or you got a girlfriend, you got a boyfriend, you got a husband, whatever. You might have to go through a few of those and learn from them until you get into a relationship where all of a sudden you think it's perfect, but that's because you stopped doing the things that caused problems in your previous relationships and you finally matched with someone who learned from their previous relationships. And now you come together harmoniously. And all of a sudden it seems like, oh my God, I'm glad I found you. What you did is you found yourself. You finally evolved to someone who doesn't keep making the same mistakes. And now you're, in other words, you were practicing. And so, and you should thank that ex. A lot of people break up with their exes and like, oh, you're never going to find anybody like me. And you wish them well, bad. And you think, oh, you wasted 10 years of your life. No, you didn't. You didn't waste anything. You learned everything from that. And so you should thank them. They should thank you. But most people don't do that. They just think that that was a big mistake and I wasted. No, well, if you think that, then that means you didn't learn anything. A lot of times people keep making the same mistake over and over in trading, and they wonder what they're doing wrong instead of analyzing what they've done and going back. How many of you do that, by the way? Let me just see a show of hands. How many people actually evaluate your previous trades and you go back and look at what happened and what you could have done differently, what you did that caused it to be good, or what you did that caused it to be bad, and what you could have done differently. And then actually on the next trade, you don't do that thing. Yes, Joe, that would be a decoupling probably where some of these altcoins will no longer correlate with Bitcoin. If on the altcoin season breakout. When Bitcoin loses dominance, which I believe it is kind of right now already on the Bitcoin dominance chart. Doesn't mean we don't have more upside for Bitcoin. It just means that we could be coming into altcoin season. Let's see.
Hey, Nico, can you take a look at ENA, ENA?
It looks like it's pretty much correlating with all these other ones right now. Everything's kind of dumping, but I mean that it does look like a nice head and shoulders. We got a little dump on it right now. This is a lower time frame. Let's go to the hourly and see what it looks like.
Got it coming down to about 40 cents or so is what I got estimated.
Yeah. This looks like.
Can you show your screen, please?
Yeah, we do got some resistance here and some support and resistance here. I would say somewhere right there in the 38 cents range. Resistance, 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 support. That could be where it's heading right now.
Thank you.
You're welcome. So we got a big dump right now, guys, going on in the market after weeks of just pushing to the upside. So this is not necessarily a bad thing.
Hey Nico, it's Moni.
Hello, how are you?
Hi, sir. So, could you please share some pointers about what are the things we should look at when we are evaluating pass rates?
Say that one more time. Could I, how we are doing what?
So, when we are evaluating pass rates, I'm guilty of not doing it until now. I'll be mindful moving forward.
I'm sorry, I didn't understand. Building what?
Past trades.
Oh, past trade.
Pass rate. Sorry, I'm kind of speaking away from the device. Can you hear me?
Yes, I can hear you. Go ahead.
Yeah. So while we are evaluating past trades, can you please share some pointers that we should be looking at? Like, yes, I know I lost in past trades. So what are the pointers we should be looking at?
Yeah, so if you went long or short and you got stopped out, for instance,
Right.
you would look for at your entry, you would look at where the support and resistance levels were. You would look where it bounced after it hit your stop loss and kept going. You would see where it bounced, where you should have put your stop loss instead. For instance, here on XRP, let's say this is the support level, this white line. We're bouncing, 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 and it bounces. Let's just say it bounced here instead of dropped through, right? And you go long. You put your stop loss here underneath this, what was major support. But then it comes back down and goes through this and then hits your stop loss and then still goes the way you wanted it to go. What did I do wrong? Well, you put your stop loss too close to that support. And if you come and look, you can evaluate and say, well, where was the liquidity pools? Where was look at these wicks here that went down that far and came back up, went down that far and came back up. Look where the next support is down here, and possibly, we have some resistance here. So maybe you would have put your stop loss down here under this level first. Another way to do it is you come up here to where you're going to place your trade, long position, short position. It's the fourth one down. Let's put a star there so they stay at the top. But let's say we're going to go long here. Before you go long here, you're waiting for that big bounce. You click this and you put this on here. And where do you think the profit is going to be up here? Where do you think it's going to go back up to? And then you see right here, risk to reward ratio 1.2. Well, that's only if you put your stop loss way down here. So, but if you move your stop loss up, you want, like Chad will tell you, you want to be at least a 3-to-1 risk to reward ratio. We try to even go better than that, but 3-to-1. So if you were going to put your stop loss right here, that's crazy risk to reward, right? 14-to-1, but it's higher risk of getting stopped out. But if you move it down to 3-to-1, right there, 3, risk to reward 3, then you would have put your stop loss down here, and it may have come here and then came back up. But another way to do it, and then you wouldn't have got stopped out. But another way to do it is you figure out where you're going to put your stop loss. So let's just say you decided that you were going to take this trade, like I just said, it's going to come down and bounce. You go long on this line right here because you think it's going to go up. You put this here and you say, okay, well, I'm going to put my stop loss tight right under these wicks because I think it might come down. If it does come down below, it's going to hit those wicks and then go up. What you do now instead of going long here and put your stop loss here, you just move your entry down to there, right? Move your entry down to where your stop loss would have been. And you only go long if it hits that.
Gotcha.
So then what you're doing now is you're putting your entry where where most people are getting stopped out. Because if it would have come down and hit here, it would have stopped you out. But if your entry was here, it would have triggered your entry and you would have went long there where most people are getting stopped out. So this is just a little bit more, advanced, not even advanced, but intermediate trading where you're trying to think ahead. You're playing chess instead of checkers. Instead of putting your entry right on the support line and your stop loss right under the major wick zone, you bring it down a little bit and you don't enter until it hits that. until it wicks down and takes everyone out, that's your entry. That's where you go long. And then you write it up from there, and your stop loss is even lower.
Nico, it's funny with this, with the XRP, the way it fell through so many levels of support this morning, it reminded me almost exactly what happened the first week of June with Bitcoin, when we were trying to break the all-time high for the second time, and it just kept falling through 3 levels of support, like just like XRP this morning.
Yeah.
I don't know if you noticed any similarities to that or not, but as it was double topping, I was like, this looks just like what happened to Bitcoin, and sure enough, boom, 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 all morning.
Yeah, look at that. And just look at that next wick down right here. Boom.
Picking up momentum for sure.
Just like we told you. I mean, look, I drew these lines before it did that, guys. And look, as you can see, it came down and hit the bottom again, double bottom. Remember, I said it might double bottom. And then it went through that and then went right to the next one.
Yeah.
It didn't stop
All
there
morning.
because my line was there. It stopped there because that is the zone. That is the next support and resistance level. Now, unfortunately, I'm going to stay in this trade because I think it's temporary. We will bounce here, but the question is where, and it might be here. This might be the next major area here at the $3. This is a big dump, guys.
Right around 280, I think there's some more. What is it? 285 or something.
And look at Bitcoin. Bitcoin still kind of, I mean, it did break out of its downward trending resistance, and it did hold the support, and it did start to climb and make higher highs, but it could not get above, it got above this one. But as you can see, if you draw a line, this is usually what you want to happen. You want it to break out, retest, and climb higher than the previous high. This is the previous high. And it did that. And it even looked like it was holding support and climbing even higher. This would have been an entry. This would have been one of those ones that is a classic trade setup that ended up falling back through for whatever reason. But your stop loss would have been probably under here and you wouldn't have lost much. But
It's been rejecting off the 50 EMA all morning.
I got stopped out here because I moved my stop loss and profit here under this line because it was already broken out. And I'm thinking, I'm going to go to bed. If it falls back below this line, I don't want to be in this trade anyway. And it did just enough to take me out and then climb back up. But I'm glad I stayed out. I didn't get back in. I just stayed out because there's so much volatility going on right now. And this is not a predictable situation. Now it's come back down and retest this line again and then fell through, bounce, and then fell through. And it's falling. It's coming back down probably to retest this level. Now I could move this line, but that wouldn't be in sync with all the touch points of all the tops of all the wicks. And so generally speaking, this is a higher high than here, didn't quite get higher than here. And so that's rejection. That's all it is. That's just rejection. There's not enough buying pressure to get it over the hump. Let's look at some other indicators here. Look at the RSI, stochastic RSI. Stochastic RSI on the weekly time frame, guys, is we had a high. We came all the way down. Generally, we dropped below the 80 on the RSI, this dotted line, and then the blue line crossed back above the orange line up to the upside, and we pumped all the way up to 123,000, all-time high, but look, lower high on the RSI. And it looks like the blue line is curving back around on the weekly to cross the orange line to the downside. If that happens, I mean, I'm on the total crypto market cap here. We still have bearish divergence on the regular RSI and on the stochastic RSI. We did not make a higher high here. We didn't even get back up to the 100. This is the 100 on the RSI right here. It's about as high as it goes. Not enough buying pressure to get back up there. This time we're turning already. We did not cross the orange line to the downside yet, but we do have a big dump happening right now. So if that does, and then the orange line gets on top and starts to come down, and we get back down below the 80 on the RSI, that could be a problem. That could be further dumping to the downside, and it could indicate a short-term temporary crash. And that would be the best buying opportunity, because this is when people panic. This is when people freak out and say the top is in, that's it, it's over. And the big money comes in on the big dip and buys it all back up. And you're going to wish, like some of you already said, that you didn't sell.
Hey, Nico.
Yes.
I've heard you use the term liquidation pool. What is that? How is it relevant, and how do we determine that?
We use coinglass.com. You can see it here. Bill has it somewhere in the
And in the help desk.
help desk. Okay, so in the help desk here in the Discord, you go to help desk and you go up here to the pinned messages, click there, and coin glass liquidation heat map right here. Just click on that. It's going to take you here. Now you put your parameters here. I'm on Binance. I'm on BTC USD perpetual. You can do USDT if you want. I'm on Binance because it's one of the larger platforms, largest exchanges, congregates more information. I'm on the 12-hour. I hit refresh, and it's showing me where the money is, where the liquidation levels are. So if this comes down here, and generally the hotter yellow it is, the hotter fluorescent it is, the more money is sitting there.
Okay, so heat map and liquidation pool are the same thing.
Yeah, oh, it's the liquidation heat map. So the heat map is showing you where the liquidity is, and it's showing where people will get liquidated. So if this comes down here, all this money sitting here is getting liquidated.
Okay, all right.
So people are getting liquidated, not just maybe shorts or longs or whatever, whatever the liquidation level is what's happening here.
Okay, thanks for clarifying.
Yes.
Hey, Nico, talking about liquidation, like when you're in a trade and you're not doing too well, we can do certain things like adding more funds, more margin into the trade to make the loss a little bit less severe. Can you show us how those are done and what kind of impact it has to the bottom line?
Yeah, I actually just did that a second ago on my XRP because I did go long in this bounce right here, and it did drop lower. And my liquidation was right about here. And what I just did is I went up here and I changed my leverage from 14x down to 8x, and that pushed my liquidation way down to here to get it out of the way because I didn't want to get liquidated. So now I should have had a stop loss up here, and I should have got out of the trade already. I should have got out of the trade already, but I was busy on some other calls before this call, and I got sidetracked, and I did not have a stop loss. But I'm also not playing with a lot of money here, so it wasn't a big deal. I also think it's this is a temporary dump. So again, don't do as I am doing, do as I say kind of situation. Don't follow me. But anyway, you can manipulate your liquidation and your contracts and stuff like that.
So lowering the leverage actually reduces the margin in the trade from what I've noticed in the middle of the trade, right? When that happens, does it sort of calculate the loss right then and there, and then you get on to a new liquidation point and so on? Or
no, when I did, what you mean when I do what I just did?
Mm-hmm.
No, all it did is it lowered it raised the amount of money I was risking in my margin by lowering my leverage. And since my leverage is lowered, the higher your leverage, the closer your liquidation is to your entry. So
that's
since
right.
I lowered my leverage, I lowered my liquidation much further away. I pushed my liquidation further away.
So in other words, it sounds like by lowering your leverage, you've actually increased the margin you put into this trade.
It's like your electric bill is about to be shut off, and you call them up and say, I'm not getting paid till Friday, and they give you an extension till next Monday.
Okay.
Okay. At first, you were panicked. At first, you were about to get shut off, but now you take a deep breath because you just got a little time. So all I did was kick the can down the road. I bought myself a little time. It would have to go all the way down. The price would have to go now all the way down to $2.77 for me to get liquidated. I'm not going to let it go down that far before I would close the trade, but or reverse the position. In fact, I could go short. If I see it breaking through this support here, I will probably add a short in addition to the long, and I'll just stay in the long, but I will short it just to make up for the loss in the long. And then what will happen is once I finally see support and we start to climb, I will close the short in profit and then ride it back up until I'm break even on the long. That's called hedging. That's not, you need to learn what you're doing there before you start doing that stuff. You can go long and short at the same time, but you need to know what you're doing because you can get in trouble there as well. Because if it's going short, if it's going against me, and I put a short in to make up for that, then I will be profitable on my short, but I will be losing money on my long. But it's not lost money until you close the trade. So it's considered unrealized losses or unrealized gains. So if I have two open positions, one long and one short, both with the same amount of money, and it goes in one direction over the other, then in one direction I'm making a profit. I have real unrealized gains, but in my other position, I have unrealized losses until I close that trade. Now, if I close them both at the exact same time, I will break even because I will make money in one and I will lose money in the other, and I'll just break even. But if I wait until I see that we have major support on the one that's going in my direction, and it starts to bounce and climb and starts to hold market structure. And so instead of just continuing to fall, I find that it bounces here and then gets back above here and holds a support, gets back above here and holds a support. And I see that it's starting to climb back up. I will close that trade and take the profit. And then I will wait for this to get back up and break me even on my long and then go into profit here. So that way I can make money in both directions. But you do got to know what you're doing. So be careful doing that. But yeah, and not only that, guys, but if you got enough money in your account, you can kind of buy your way out of everything, every situation. And I hate to say that like that, but what that basically means is that I can always add money or contracts to like, for instance, I'm long up here, right? If I want to be long here instead of up here, I can add a bunch of contracts to this order. I don't even have to, all I have to do is just come over here and increase my amount of contracts. And once I hit the open long button, it'll add to this trade, but it will move this entry down to about here, which is closer to the current price, because I made that new entry here. So it'll keep me in the same trade, but it'll move my entry closer to the current price, which would mean I wouldn't have as far away for it to go for me to get back to break even. But I would have to be very sure that I think it's coming back up for me to add contracts and do all that. That's kind of like doubling down. You're so sure that the trade is going to come back to your direction that you're literally willing to add more contracts to your original position. And by doing, in fact, I'll do it right now just to show you what will happen. I got 10,168 contracts here. Let me add another 3,400. I'm sorry, let me add another 12,000. Let me just move that to 10 so it's even. Let me move that to, so I got 10,168 on the long right now. Let me add another 10,100 approximately, just so it's close to even. And what will happen is because I'm placing that entry down here at the current price, this will probably, and I'm using almost the same amount, this will meet me halfway usually. It'll come down even 50% of the way from the current entry to the original entry. So I'll go long right now. Watch this move. You see how it went down to here now? So now I'm not so negative anymore. I was negative because my entry was up here and this is way far away from my entry. It would have to come all the way back there, up there to get me even again. But because I just doubled down and doubled the amount of contracts, this now moved 50% of the way to the current price. So now I don't have as far for it to go for me to get back to broke even, but I am risking twice as much money now. If you can't see my screen, it's on your end, buddy. Hopefully everyone else can see my screen. Does that make sense? That's a little bit more advanced stuff, guys. I don't recommend if you're brand new to be doing these things because you can get in trouble, especially if you don't know what it means, what you actually just did. But I'm still negative the same amount, but I don't have as far now for it to go for me to break even because I doubled the amount of margin that I'm playing with. Now, if I increase my leverage back up to 14x, then my liquidation will also come up from, in fact, when I added those contracts, it did come up a little bit to 280 from 277, still far away. But if I increase my leverage right now, if I want to come up here and increase my leverage, watch what happens now. Notice that I have my margin is $3,147. That's what I'm risking on this trade. I'm at 8x leverage. Look at my liquidation down here. But if I change my leverage from 8x to, let's just say, 10x, watch my liquidation down here move. And remember, I was risking, my margin was like 3,700. Confirm. Look at my liquidation just popped up to $2.91. It got a lot closer. And now I'm risking 2,400 instead of 3,700. So by increasing my leverage, it lowered my margin and moved my liquidation closer. So I'm risking less money, but I don't have as much room anymore. Mike, I don't know if you can hear me. Mike Gable speaking, but I am sharing my screen.
I'm watching you, though I can't see your screen. I see you.
Click on Nico's screen, upper left-hand corner. You should see Nico's screen. You should be able to click on it.
I see it now. Thanks. Appreciate it.
Yeah, no problem. So hopefully you guys understand what I was just talking about. These are just things that you can do to manipulate, once you get good and you understand what you're doing. And sometimes just because you're good and you understand what you're doing doesn't mean these are smart things to do. Just because you know how to manipulate shit doesn't mean it's good to manipulate shit. But there's a lot you can do. Just like your iPhone, I always tell people, it's like, I have an iPhone. A lot of us do. I make calls, I take calls, I text, I can go on social media, I can look at Facebook, I can look at Instagram, I can look at TikTok, I can do all that on my phone. I can go check my email. I can take pictures and videos and all that stuff. That's really what I do on my phone. That's really all I use it for. But there's probably 1,000 other things I can do on my iPhone that I don't even know about, that I don't even do on my phone. There's so many things that this thing can do that I don't even use. Right? And so same thing with trading. There's a lot of things you can do in your trading platform and on these charts that you not only aren't doing, but you probably shouldn't even do. Until you really know what you're doing, until you really understand it. Start changing settings on your iPhone, and before you know it, you don't even know what you did and you're locked out and you can't even get on your phone. So just because you can do something doesn't mean you should until you really understand it. Hopefully that answers your question, but yeah, you can add contracts. You can take, and by the way, that's just that. If I wanted to now come down to my open position and go to margin and click edit, I can actually add margin and remove margin without changing my entry or my leverage. But you got to know why you're doing something first before you do it. Just because you can do it, you got to understand why you're doing it. And so this is why, Chad and we're very cautious with what we say in the group, Sometimes because I think people sometimes hear something and they just go and do it without thinking why they're doing it. And, or they, they just copy trade because they see we're in a trade or something and they just do it without thinking why. And that's the whole point of learning how to trade is because we could just have a signal channel, guys, where we just give signals every day, all day, and we don't talk to anybody. We just, here's a signal. This is a trade setup. And you could take those all day long, every day for 10 years. But if you don't learn why we're giving that signal and why we're telling you that that price is where we think it's going to go, and you never learn, then you're always going to be dependent on the signal, and you're never going to understand why those signals are being given and what and how to, look for your own trade setups. That makes sense. Yeah, Bill says leverage does not increase or decrease P&L or stop loss. It only moves liquidation price closer to or further away by putting more of your money into the margin.
We beat that to death on the basic call. So anybody that's got any confusion about that, show up at 2 o'clock and we will go through it.
Yeah. And that's what I'm going to recommend for most, all of you, basically, guys. Get on the basics call coming up at 2. I mean, there's so much that Bill goes over that I don't go over most of the time here unless you ask me the question, because I don't even know what most people need to know until you ask me. But basics call is all of this stuff that we go over that you're asking about. And you definitely need to understand the basics before you get to start getting into the intermediate or the advanced stuff. Sherry asks, where and how do you know that you have received 50x or whatever X leverage payout when you close the trade? Okay, well, first we got to answer the assumption that you're getting 50x the money. So here's how it works. If you go along right here on this white line, let's just say you think it's going up, and you go long, and Bitcoin goes up to here, and you close the trade out when it hits this line, right? Let's just say that happens. And you have $1,000 on your margin, which means you're risking $1,000. And you're at 10x leverage. Okay, so you go long here and you have $1,000 on the trade, and it goes up to here and you close the trade and you're at 10x leverage. Okay, so just look, it just went from here to here. That's 6.33%. So let's just do the math. You have $1,000 in your margin and it went up 6.33% times 6.33%. Without any leverage, you would have made $63. But because you were at 10x leverage, you make $63 times 10 on that trade, which is $633. So that is, instead of making 6.33%, you make 6.33% times 10. Because of the leverage. So you made 63% on that trade. So if you have $1,000 at risk times 63.3%, you just made $633. If you're trading on a USDT margin, that profit will go back into your account, your available margin level, your maintenance margin or whatever. It'll go back into your account until you're ready to take the next trade. So if you had only $1,000 and you used the whole thing on that trade, you will now have $1,633. Oh, where do you see the increase? You come down here to closed positions. After you've closed the trade, you click on close positions and it will show you that whole trade from start to finish and the profit margin and everything. Go to my it'll show at the bottom, it'll show under closed positions, it'll show the trade size, the open price, the closed P&L, and over on the far right, it'll show your fee paid, your realized P&L, and your ROI. And if it's in Bitcoin, it's going to show it in Bitcoin. If it's in USDT, it'll show it in US dollar, or it'll show a percentage gain. Over here and show you, but this is just a little dummy demo account that I use. There's like $1,400 in here, but closed position down here, just go all the way over to the right. It'll show your ROI here, percentage. And if you switch P&L, like BTC USD, switch P&L will show how much Bitcoin it was compared to how much, what percentage what it was. These are both Bitcoin margin examples, but so it's going to show it in Bitcoin instead. And it's, then you would have to go and if you made 0.001 Bitcoin, you would then have to go to a Bitcoin converter to figure out how much that equals in US dollars. Go to another account and show you a different example. Does that make sense, Sherry? Michael says, I've been to at least 15 onboarding and basic calls, and I always learn something new. It's time well spent, in my opinion. Thank you, Michael. I appreciate that. Yes, it is. For sure, for sure. I'm not sure what you mean by you'll have a sidebar with Bill, but if you get on the basics call, he can show it to you. But you said you wanted to know where you see it. It's in the closed positions underneath here. All right, let's go back. We're going to wrap this call up here, guys. Get on the basics call with Bill at 2 o'clock, but this was all the action today. You know, we had a big dump, and XRP might be recovering right now. I don't know if it's going to or not, but it looks like after this bounce, after this big bounce here in this zone, I don't know why it would only come to here, but we did have this was the last time we had like some big support here. Wasn't that much, and it may not be done dropping. I would think that it would come down to major resistance down here at the worst case scenario, which is right around the $3 range. But if this is the big bounce, because we did bounce here and we do have 3 candles on the way up on the 10-minute, we had that here as well before we fell further. So it may not get back above. It could just be coming to retest this level right here, which it looks like it's doing. You see that long wick up right there, right to this floor. And then we could fall further. But this overall structure could be a little bearish. It could be something a little bit different happening here. If I see this start to fall, continue down a little bit further, and we continue this, I might just put a short in as well as a hedge I don't like to close just because I'm negative right now because I'm not that far away. It's not that far away from my entry. So all it's got to do is come up here to here for me to break even. So it's not that far away. So I don't want to close it as a loss. So what I'd rather do, and I know that this will be a temporary pullback, is that I would rather wait for it to come back up. It's only $230 negative at the moment, but if I do think it's going to fall further, I might short, do a hedge, having a short open, keep the long open, just do another trade with short, and then make that money on the way down. And once I really think it's going to bounce, I'll close the short out and then ride it back up to my long entry. That's risky. Not telling you guys to do that. Better to learn how to hedge first. There's a couple guys in this group who are masters at hedging, but that's not something that we try to get you to do. It is a little bit of, robbing Peter to pay Paul. And sometimes you can rob Peter to pay Paul, and either Paul or Peter will know because you pulled it off, right? You rob Peter, you pay Paul, and then you make the money somewhere else and you pay back Peter. It's kind of what's happening when you do the hedge. And so it's just a much riskier situation to put yourself in. I'm reading something about shrimp. I didn't know. Bill, you had a bad shrimp experience or something?
Yeah, I almost died the other day.
Oh shit!
A little late to the party, Nico.
I missed that. I'm sorry, man.
No, it just happened. I don't know what it is. I can't tell you how many times I've been to the Red Lobster and I've had all you can eat shrimp, and I mean all I could eat. And I never had a problem. But the other day I had a bowl of shrimp. I got really tired. I laid down. My hands started to itch. That was weird. And then we'd been to the river the day before. All the mosquito bites started to itch. Then my whole body started to itch. I get up to get a shower and my lips are swollen. I told Joanne, I'm like, get on Google and find out what's going on. And Google says, well, it's anaphylactic shock. You better get to the doctor. We live 8 minutes from an urgent care, about 7 or 8 minutes. By the time they got the EpiPen in me, I could barely breathe.
Oh my God, bro.
And I've never had a problem. Never.
Was it fried shrimp or was it like peel and eat?
Peel and eat. And she cooked it in butter. It was really yummy. And then it almost killed me. So we're still trying to figure out, like I said, I've never had a problem before. Gary just mentioned something about iodine, and I've been taking iodine. So maybe I had too much of that in my system. I'm not sure. But guys, if you ever have itchy palms or, something weird like that after you eat shellfish, that is definitely a sign of something to come. So take it serious.
That's why I stick to cows.
For real. We were just trying to break up the monotony of the beef, man.
I know. Trust me, I like it too. And I like it cold on ice, the dipping in the cocktail sauce and the
oh, it's so good. Never again.
It's a little risky. Well, I'm glad you're okay, man. That sucks.
Sorry, I appreciate you.
All right, guys. Any other questions? Let's see. Yeah, XRP creeping back up a little bit. God bless you. Dan, glad you're okay, man. Wow, so glad you're okay. Yep, a lot of well wishers here. Only 10% of shrimp is inspected, most from Russia. I didn't know that. Not here in Florida, Keith. Comes right from the Gulf of Mexico. Probably why I don't get sick. I don't know. But then there again, there's warnings now at the beach that there's some flesh-eating virus going on, and they're warning people to stay out of the water. Guys, we're just probably not supposed to be in the ocean, to be honest with you. That is like other wild alien creatures' domain.
Literally.
Gulf of America. Yeah, correct. Sorry about that. I forgot. Whenever I see someone who got eaten by a shark or something crazy like that, or stabbed from swimming over a manta ray or some type of stingray, I'm like, I don't think we're supposed to be doing that. The fact that you can't breathe underwater should give you an idea that you probably shouldn't be down there under there that deep.
But then again, we can't fly either, and we get on planes. Yeah, I like it too, David. I mean, I went snorkeling in Aruba. It was beautiful, 80-foot visibility on the shipwrecks and just seeing all the beautiful fish swimming around. But I was still kind of nervous, because you see these giant, groupers sitting down there that are the size of VW bugs just looking at you, and they could just inhale you in one gulp. All right, Mark, let me see what you got. Bitcoin, US dollar. Let's look at this real quick before we wrap it up. This was, yeah, got a possible. This hasn't happened yet on this side. So you're projecting up that possible pump up there. But yeah, could be. Could be. Back to BTC. Let's look at Ethereum one more time. Yeah.
So Nico, what kind of like the ideal setup you're looking at that you guys, you and Chad, are like giving off, signals off of for us?
I would like to see, this is Ethereum right here. I would like to see Ethereum bounce and hold at support here, which it probably will, and get back above this level right here. Once it gets back above, because this was resistance, 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 support, 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 breakthrough, resistance. Once we get back above that, that's a good indication that buying pressure is back, and then we will probably run up to new highs. But until then, I don't want to go long right now until that happens, but also, and then you might say, yeah, but if it bounces here and climbs all the way back up to here, wouldn't it have been better to go short here? Yeah, in hindsight, if this happens and this happens, then you could say, yeah, I should have went long back here. But if it bounces here and only comes up to, let's say bounces here and only comes up to here and then falls lower, then this was not a good entry. So how do you know when it's a good entry? When it gets above a major resistance level and holds it as support. Then you can go long and then put your stop loss under this level. But so because we're hitting the tops, guys, we're way up here. This is as high as XRP's been in a long time. Let's go back and look. Let's go to the daily. Okay, we were up here almost a year ago. Well, 7 months ago in December. And so now we're coming up to this level again. What does that tell you? Go back a little further. We were here in March of 2024, here where we're at right now in May of 2024. Both times we come all the way down, come all the way back up, come all the way down, come all the way back up, come all the way down, all the way back up. And right now we're kind of at this level, but we're not quite at the top. So we could see a big pump to the upside, or could this be this could be the top again and we come all the way back down? Is that possible? So because of that, it's kind of nerve-wracking. So what we want to see is it break above its most recent high, then we'll probably get a run up to the 4,000 range. And if we get above that, obviously if we get above this level right here, that's when we know that we're going to go probably parabolic to a new high. A new high in this bull market rather, because I think it's been above that level at one point. I don't know if that's the high here. I can't remember. So that's that. Let's look at Bitcoin. Very similarly, Bitcoin is doing something. It is trending up overall, right? And we're hitting a top, hitting a top, hitting a top. So what happens when we hit tops? Do we just keep going? No, we usually have a pullback or a consolidation period. And looks like this channel, right? Bottom, top, bottom, top, bottom, top. What comes after that? Does it mean it's going to come straight down like this or this? No, this one it could go like this, sideways all the way over to this, and that could be like 107, 108, 110, and then shoot back up again. Or it could just go, it could just do this instead of instead of going consolidating for a while, like it did here, it could just come down a little bit and then shoot up again and double top like it did here, hit the top, came down, came back up again before dropping. Here, went up, hit the top, came down, shot up again before dropping. Hit the top, comes down, could shoot up again before dropping. So there's a lot of unknowns. So what we do is we see this overall big picture, and then we go and look at the lower time frames. This is the weekly. Then we go down and look at the lower time frames, and we decide, okay, in the short term, we were in this giant bullish flag, this giant pennant, this giant wedge right here, which is like a apex, and we just broke out to the upside. And now we're coming back down to retest. So what I would want to see is I would want to see it bounce here and start to climb back up and get back above this level. Then I will go long on Bitcoin back up to this all-time high. But right now, it already broke out and it couldn't get traction and it's starting to come down already. So this could be very temporary, guys. It could also possibly come all the way back down to this level and stay. And maybe this is the channel hand. Maybe I just don't have the lines in the right spot. Maybe here we went through it a little bit. Here we retested it. Here we just retested it. And maybe we're going to come down to the bottom here and do another touch point before we finally break out. So I have to watch and see first before I'm going to give a signal on it, me personally. But when it comes to scalping, if it goes below this floor right here at, let's say, 116.7 and drops below that and retest, I might give a short scalp signal to ride it down to here before it bounces up. And then here I might give a long. On this bounce, I'll definitely give a long. So I'm not going to wait for it to get up here before I give a long signal. But if it holds here and starts to climb up here, I want to wait for it to break out first before I give a long signal. But if it comes down to the floor, I'll give a long signal. If it breaks through this floor, I'll give a short signal. Does that make sense? And that you don't even need me to do that. You can watch this yourself. Have a top resistance line, have a support floor, and then have a downward trending possible, bottom of this channel. We've held the support here. That might not even be there. It might be here. So it might be even more exaggerated. That's why I had this like this before, because and that could even bring it down to here if it does break through there. It could be more like this, coming all the way down to the 112 again, and that would make sense because that was the previous resistance that we never retested yet. So we could just consolidate like this for the next couple of weeks, guys, down to 112, and that would be a great entry. Just so you know, that would be an awesome entry right there. So I'll definitely be giving that signal if that happens. But in the short term, I'll be watching it and I'll be giving my updates and what I think is going to happen. But sometimes, guys, it's better just to keep learning, go ahead and take trades. Go ahead and look for trade setups. Go ahead and do that, but just do it with very little risk and very little money until you get the hang of it or you become consistently profitable. And then wait for the trade setups with the real money. Like wait for the trade setups, wait for the big moves. Then you can be more confident to take that signal and use better leverage and use better margin. All right. So what I would recommend, guys, especially if you're relatively new, is get on the basics call chat. I mean, Bill posted the link right here in the Zoom, but he also posted it in the Discord, in the main chat, and in the announcement section. You'll find it there. And I'm going to be keeping an eye on this stuff today. So obviously, there's been a little bit of correction and pullback this morning because of news or whatever's going on with Ripple. And but that usually is short-lived, and then it consolidates a little bit and then pulls back and starts to bounce and come back up. But I'll let you know if I see it, if I think it's support and it's time to go long on that. All right, guys, if you have any more questions right when I wrap this up right now, just ask it in the main chat, tag whoever you want to answer it, whether it's Bill, me, or Chad, or you can send me a DM if it's urgent, ask it in the main chat. Don't send me a DM if it's urgent. Always ask on this call why you got me live if it's urgent, because I'm going to answer it right now. But if you send me a DM, I could take the rest of the day or tomorrow before I get back to you because I'm in the middle of 10 other things. That's why I'm here for this amount of time. All right, guys. All right. Love you. Take care. See you on the next call. By the way, today is Wednesday. Tomorrow night, we are having our live public Zoom. So you guys are welcome to get on that as well. Just ask for we usually post the link in the free Facebook group, but we'll also share it in the main chat as well. And we are trading live on that call as well. So it's just an extra time to get on with us. Oh, by the way, I wanted to say this, guys, before we jump off. If any of you have
had some aha moments, if you've learned some things, if you've made money and you had a good trade, or some of you I already know have done quite well in the last several weeks or months, and you are open to being interviewed podcast style with me for a Zoom call, which I will end up uploading to Instagram. I'm not sorry, YouTube. If you're willing to do a podcast style interview where I just ask you some questions, see how you're doing, we just chat for a little while, 5-10 minutes. And then if you're willing to do that, it's not going to be live. It's going to be recorded. So you can watch the replay and let me know if there's anything you don't like about it. But I'm just going to, go over, what you've learned here, Crypto Renegades. If if you're having good results or whatnot and want to talk about it, send me a DM if you're open to doing that. I'd be love to send you a link and we'll schedule a call. All right, guys.